Welcome to How to Make Money in Stocks with Investors Business Daily, featuring market commentator and host of the IBD Market Wrap, Amy Smith, and Matthew Galgani, host of the IBD Stock Analysis and editor of the IBD Extra newsletter. Tune in each week as we use history, not hunches, to help you stay safe in today's market and get in early on tomorrow's winning stocks. Now, here's Matthew Galgani.
Welcome, everyone, to another episode of How to Make Money in Stocks with Investors Business Daily. Since Q2 earnings season is kicking into high gear, really next week kicking into high gear, we're going to talk about how to get ready for the earnings season.
But first, let's take a look at the market. Well, stocks reacted very positively as Greece voted to adopt austerity measures demanded by the ECB. And the market had a number of upbeat earnings reports, and that can always turn things around in the market. And we have gone back into resumed uptrend. We had the NASDAQ hit a new high.
New all-time high.
And, we were range-bound for a while, and we said, look, either earnings might turn this around, and so far it has. The tech stocks rallied this week, and the banks had a good week. We had J.P. Morgan, Citi, Goldman Sachs, Bank of America, Wells Fargo. So all in all, not a bad week, Matt.
A really good week, and so far a really good earnings season. We had Netflix jump on earnings, you had Google jump on earnings, and outside of earnings, Facebook really popped this week as well. And as we'll talk about later in the show, it's due to report on July 29th. And if you just scroll through the rest of the IBD 50, with just a few exceptions, those stocks are doing well right now.
And we also had eBay. Don't forget that one also popped on earnings this week. Now, next week, we have Valiant Pharmaceuticals, we have Celgene, Starbucks, Illumina. We also have GoPro, Apple, Chipotle Mexican Grill, Amazon, Visa, Dunkin' Brands, and Starbucks. And there are many other stocks. I didn't list them all, just listed some of them. Make sure you get your plan in place because now is a great time to be looking at these stocks.
And we'll talk more later in the show about how to get ready for these upcoming reports that continue well into August. Now, not to be a party pooper, but to put a little bit of caution into this, it is great to see these stocks taking off. It is great to see the NASDAQ at an all-time high. But I would encourage people, take a look at a monthly chart, and we'll put one up on our website, investors.com/investing show. And if you look at the big run that was made from 2003 to 2009, and then the big run that's been made from 2009 to now, you can see that just historically, it looks like at some point we're going to be due for another bear market. So keep that in mind. Of course, with low interest rates, with a lot of economic chaos in Europe, the American stock market's looking pretty good as a place to put your money right now. So there's a lot to keep this momentum going. But just as caution, keep that in mind that at some point that bear market will hit, and make sure you have sell rules in place.
And the other thing, of course, is just keep your rules. Don't buy these stocks before they report their earnings. Just don't do anything dangerous and you should be okay. If you keep the CAN-SLIM rules, you can learn more about our system. If you are new, go to our website at investors.com/investing show, and you can take a trial, or you could even try one of our premier products. You could try Leaderboard, which can help you with your watch list.
We talked earlier about Netflix, and when it released its latest earnings, it talked about some really positive growth in terms of subscribers and in terms of what that original content is doing for their growth.
Now, a flurry of Wall Street analysts raised their price target on Netflix. They added 3.2 million new streaming subscribers in foreign markets, and they added 900,000 people, Matt, in the U.S. They're going to launch its service in Japan this quarter, and in Spain and Portugal and Italy next quarter. They also have a slew of original shows, which I have seen none of these. The Marvel's Daredevil, Sense8, Dragon's Race to the Edge, and Grace and Frankie. So basically, if a company reports well, also listen to the news that goes along with the earnings.
All right, let's take a quick break and come back and talk about how to get ready for the rest of earnings season.
Imagine a Sunday morning, coffee in hand, you turn on your laptop or tablet, and you see a handful of stocks near a potential buying range. That's what you get with Leaderboard from IBD, a timely watch list put together by our market experts, and it's updated throughout the week with alerts to any buy or sell signals. The results? In 2013, Leaderboard has more than tripled the performance of the S&P 500. So to see what's on the list right now, get a free trial of Leaderboard at investors.com/radio show. That's investors.com/radio show. Welcome back to How to Make Money in Stocks with Investors Business Daily, featuring market commentator and host of the IBD Market Wrap, Amy Smith, and Matthew Galgani, host of the Daily Stock Analysis and editor of the IBD Extra newsletter.
As we've been saying throughout the show, Q2 earnings season is kicking into very high gear, especially starting next week. So today we're going to talk about how to set up a plan for the stocks that you already own and decide what you're going to do with them before those stocks report. And number two, how to build and maintain a watch list for stocks that are near a potential buy point and about to report. Now, these are not recommendations, but we'll go through some various leading stocks that are in that situation and talk about how you can build an action plan and set some target both buy prices and sell prices. And then if you're not doing that kind of process with your own portfolio, you can start applying those tips to that. And this is a good weekend, of course, to start since, again, it's going to go hot and heavy on earnings season starting next week.
Oh, we've already gotten hot and heavy in earnings. We're already into it. Okay. We've mentioned a lot of times on the show, if you've owned a Facebook or an Apple for a long time, you're in a very different position from someone who bought them recently. Now, Facebook certainly popped up this week on Friday, really made a nice move. But Apple has been kind of sitting there. And so if you had bought it, sort of recently, you're not sitting on that big of a gain. And so, your question is, do you hold on to it as we go into earnings? Do you sell and get out of it? We haven't seen stocks making quite as big moves as we have previously in the bull market cycle. However, this was one good week, Matt. This was a week when a lot of stocks actually did do pretty well. So I think this is encouraging, and I really want everyone to make sure your watch list is up to date so you can make some money.
A good example of this is Facebook. We actually covered Facebook in the July 10th IBD stock analysis just as it was breaking out. It had cleared an 86.17 buy point and was still well within buy range, which is typically up to 5% above the buy point. So for Facebook, that was up to 90.48. But now it's actually gone above that, had a big move on Friday, so it's extended to this point. But if you did buy on that breakout, you have to keep in mind that Facebook is scheduled to report Q2 earnings on July 29th. Now, that means it still has time to add to those gains, maybe even build a bigger profit cushion going into that. But you need to understand that there's risk in holding a stock before it reports, since it could pull back. So in the case that you do hold either some or all of your shares, make sure that you set a defensive sell price.
Well, I was talking about stocks making nice moves out of price consolidations on strong earnings estimates. But a stock can also get whacked. So this is why we're talking about this. If you're not sitting on much of a gain, it can be problematic heading into earnings season. But if you are up, let's say 10 to 15%, it puts you in a completely different place as a company is reporting. One thing I want you to think about is not only just your existing portfolio, but the fresh one that you may be building as we go through earnings season. Folks, this is an exciting time. Make sure you are seriously keeping your watch list up to date. If this week is a portend of things to come, we have seen some big companies pop on these earnings numbers.
That's absolutely right. As Amy mentioned, you are going to look at different stocks differently. So for example, if you have a stock that you bought many months or maybe even years ago and you're sitting on a large profit, you would have a different plan for that than you would for something that you bought more recently, like Gray Television or Facebook. And Ambarella is a good example of this. If you bought on the breakout last September and you're still holding, you could be up in the neighborhood of over 200%, even after that pullback that it had fairly recently. But even for that kind of stock where you have a big gain, you do want to set a defensive target sell price where if it happens to reverse and head lower, you're going to lock in the profits that you still have. But when you have a stock that is much closer to break even, maybe sitting on a small gain ahead of earnings, you're especially going to want to make sure that you have a target sell price to get out if it reports and then it goes south.
As I've been making my market wrap videos lately, what I started since we're in the beginning of this earnings season is I'm making an Excel spreadsheet of every single video that I do and see which ones could have been purchased recently and maybe some challenges you may face. So this week, Monday, I covered Norwegian Cruise Line. It had a flat base breakout. Netflix, I covered. It was just a little tiny bit above the buying range from a 3 weeks tight. And eBay was in buying range from a retake of the buy point. So these stocks all did very well this week. I think probably the question is now, if they keep moving higher, do you add to your position? But the reason I wanted to bring out the idea of an Excel spreadsheet is you can do it however you want to. This is just an easy way for me to keep a real solid track of what I'm putting on the videos. And the videos, again, are not a recommendation. It's just that a lot of the ones that Matt and I cover do end up doing well, so we want to help you with your watch list. They are available for you every day.
And when you're going through your watch list and reviewing the stocks that you have on there, hopefully you have a buying checklist, different criteria that you go through before you jump in. And if you don't, we actually have one that you can download for free on our website at investors.com/investingshow. So in addition to doing that, you also want to make sure, again, that you know when the company reports. That's very important. You don't want to go through a checklist, find the stock that's really looking good, and then jump into it only to find out that it reports the very next day. So now you have very little time, no time really, to build a profit cushion. So always know that, because if you do jump into a stock without knowing that it's going to report very soon within a day or two, that's an element of risk that you need to be aware of. You don't want to be blindsided by something like that.
Now, on my Excel spreadsheet, I'll just go quickly through some of the things that I have in there, different categories. I have the purchase price or the pivot. I have what the market outlook was. In other words, did these stocks break out when the market was under pressure? What was the power on the breakout, meaning the volume percent increase? Now, Gray Television, for example, broke out of a flat base on volume that was 103% above average. I have the average daily volume for the stocks and some other key items. So keeping a checklist like this, Matt was talking about a checklist, it will help you as you go back and do a post-analysis. You just have another piece of the puzzle to help you improve as an investor.
And if you're not sure when a company reports, you can pull up a quotes page on investors.com, scroll down a little bit, and you'll see the EPS due date. It's also in the little mini charts that you find in IBD 50, sector leaders, and other lists in IBD. But just as an example, let's say that you did recently buy Facebook and Gray Television when they broke out. Now, in the case of Facebook, you're sitting on a decent gain now. You're probably up in the neighborhood of 10% or so. Gray Television, a little bit less. So again, Facebook reports July 29th, and Gray Television reports August 5th. So you have a little bit of time to see if they add to those gains before they report, but you want to set a target sell price. This is on the defensive side in case it goes against you, either just before or just after earnings. So that can be whatever you are comfortable with. It could be, for example, 5% below the buy point. Or in the case of Facebook, since you have a little bit of a gain now, maybe you're going to set your target sell price at break even. Or maybe if that 10% profit drops to 5%, you're going to get out. There's all different kinds of scenarios. What percentage or what target sell price you set is up to your own risk tolerance. But the point is to have a plan in place. So if it hits a point where you're no longer comfortable, then you need to get out.
Now, I'm going to blow through some numbers quickly here, but if you would go to Stock Checkup, Gray Television is the number one stock in the Media Diversified Group, and that has 27 stocks in it. It's also ranked number one for the composite rating, which is a 99. It's number one for the EPS, the earnings per share rank, which is a 98. And I could go on through the list, but the thing is, if you were doing your homework, getting ready for your watch list, you say, well, this stock has really some nice, solid fundamentals here. And now, then we have to look at the chart and see, does it follow through with the technical action, which it did, and it broke out and it had that nice volume increase.
Let's take a quick break, and then we're going to come back and talk about how to build a watch list, where you can find stocks that are about to report and could be near a potential buy point.
Well, you absolutely need a watch list. Otherwise, your trading day is just too frantic. You're making last-minute decisions. You're noticing a stock breaking out. You're going, oh, well, maybe I should go buy it.
Right.
You know, if you have a ready list, okay, your ready list is something probably you want to do this on the weekend. At least get ready by Sunday evening and have a list of stocks that are ready to go. So if they start breaking out, you're prepared. That's what Matt and I do. I have a list of stocks that are setting up in potential bases and also stocks that are due to report earnings for the week that are in a buyable range. And then you want to have the not-so-ready list. And those are stocks that maybe they're not quite ready yet, but they might be before too long.
That's right. A watch list shouldn't be just one giant watch list, because that very quickly becomes a junk drawer.
Well, and then it's too many.
It's not actionable. Yeah. It's just too many things in there. You want to break it into little segments like Amy was just saying, where one would be stocks reporting within the next week or two and that are near a potential buy point, something that's more actionable. Now, of course, the question is, where can you find stocks that are setting up in a base, have good fundamentals, and are about to report? Well, one good place to start is with the various lists inside of IBD, because each of these screens is looking for stocks that have the kind of fundamentals and the kind of technical traits that the best stocks typically have just before they launch a new run. And one flagship screen that we have is the IBD 50, which is a list of the top 50 growth stocks. Now, these are not recommendations. You don't just look at the list and say, like, oh, this one's number 5 or number 2 or number 1. I'm just going to go ahead and buy it. That's not the way it works. You have to evaluate the stock's fundamentals and technicals. And one way to help with the technicals is underneath the mini chart is a one-line analysis of how that chart is doing, and it'll alert you to a stock that is near a potential buy point. A recent example was, if you looked at Wednesday's IBD 50, you would have seen that Fleetmatics was number 5 on the list, and the analysis said briefly tops 4806 cup with handle buy point. So it's telling you the type of base and the buy point. And I actually did an IBD stock analysis video and article on Fleetmatics on Friday, and it broke out, and now it's basically extended. It's right at the very top of the buying range.
Now, as you look through that little mini chart, I attended Mike Scott's Thousand Oaks meetup, and he had out there as one of his guests, he had Lee Tanner one time. And Lee Tanner did a whole presentation, and he stopped. The slide that he was covering stopped on one of those mini charts, and he had blown the mini chart up. And it really is amazing. When you go through that chart, there is so much information in there. We've mentioned this one time before on the show, but take a look at the 3 quarters combined, the 3 most recent quarters combined. That is kind of a cool statistic that we have in there. It's a number. Bill had that added to the charts because he doesn't look at just one quarter. He'll say, well, if I can see 3 solid quarters from this company, or maybe I can even see an acceleration in the earnings, that's sort of a big deal to him. But the point is, you really can go in there. You can see when the due date is for their earnings report. You can see all kinds of the earnings per share, the composite rating, all in that little mini chart. It really is just it's a breadbasket of investing information.
And you should be doing that all the time, but especially in the lead up to earnings season. Go through those screens, look at the analysis, make note of the stocks that are near a potential buy point, and then go learn more about them. But another thing we want to note about the chart analysis in those charts is that they also alert you to potential flaws within the base. So again, if you went back and looked at Wednesday's IBD 50, you would see in there like Arista Networks, the ticker is ANET. It said that the base was flawed. Noted the buy point, but made the note that that base was flawed. And in the case of Arista Networks, it's because that base was deeper than you would prefer to see. Doesn't mean it won't work, but the point is it's alerting you to yellow flags and possible red flags. Valiant Pharmaceuticals was another example. If you look at that analysis, it tells you that this is a later stage base.
And it still might work.
They absolutely can work, but you have to know the risk.
Yes, and that they are more flawed. You get to a 3rd, 4th, 5th stage base, that's just later in the stock's move. Now, obviously, there's a lot of other IBD lists. Some of them are stocks on the move at investors.com and in the paper, your weekly review, the IPO leaders, the sector leaders, and others. And for a whole list, you can go to our website at investors.com/investingshow. So take a look at those mini charts. If you're listening to the show right now, it's the weekend. And take a look at what's written underneath some of these charts, and it may give you a clue as to what's setting up, and it can help you build your watch list for the upcoming earnings season.
And the purpose of going through these lists in terms of what we're talking about today is to find those stocks that are about to report and are near a potential buy point. Now, once you find those kind of stocks, you do want to do some extra research. Find out more about what the company does, what are the products, what's in the pipeline, what are the industry trends that are affecting that stock, because you do want to know the story behind the stock before you jump in. And one stock that has been doing very well and has a very interesting story is Mobileye, and the ticker there is MBLY.
And I've covered Mobileye in the Market Rep videos many times. Matt has mentioned it June 11th. It was in the stock analysis video.
And of course, not all the stocks we cover break out like that, but it did in the case of Mobileye. It broke out the same day that we were doing the video, and it's just a good reminder why watching the Market Wrap video, watching the IBD stock analysis video, and looking at the list is a good way to find stock ideas before they potentially break out.
So this is one that, it had that hot IPO, ran up real quickly, and then it needed to build a base before it started to go again. But, you have to figure out something that has the technology that might make it move. And, of course, a lot of the insurance companies like the software, which is the collision avoidance software. So it has an interesting story. A lot of different automobile makers are using these cameras in their cars.
In fact, Mobileye counts as customers 23 of the top 25 car makers in the world. And it's a classic example of how when you're starting to see a new technology around you, it's kind of the Peter Lynch thing, pay attention to what people are buying and where they're shopping. If you look around, we've all noticed how the technologies in the cars is changing. So you want to stop and think, well, who makes those cameras so that you can see behind you? Who makes those collision avoidance systems? Well, Mobileye is the source to a lot of that. So you want to get into companies that are part of a major trend in this Internet of Things, smart car technology. That is certainly a very strong growing trend.
And speaking of smart technology, Fitbit is another example of how to find a stock. Then you might contemplate whether it's time to sell it because now it's up 20% if you bought it. In fact, we had it on Leaderboard. And if you bought it from that little IPO breakout, it was about a 10-day little base. You're up, and now do you hold it or do you sell it? They're due to report July 28th. Listen, whatever you do here, there's no right or wrong. You can hold it, you could sell it, you could sell part of it. Just make a plan, though, because what happens, Matt? We have seen some of these high flyers, and they report, and if they miss, or if the forward-looking guidance isn't very good, you could whack. You could really lose a lot of your gains. Or maybe they'll blow it out of the water, and it'll take off again. The thing is, you just don't know what's going to happen during earnings season. It's really a roll of the dice. So just make sure you have a plan if you are fortunate enough to own Fitbit.
And Mobileye is somewhat in the same boat. It's now up about 25%, which is typically the profit-taking zone because at that point, a lot of stocks will pull back and form a new base. Now, that's when many factors come into play. If you still believe in the long-term growth of Mobileye, for example, and you're willing to sit through a correction, you might hold, but maybe you want to take some of the profits off the table at this point. Those are different things that you need to go through. Asking those questions is all part of building a trading game plan for each stock that you own. And sticking to the theme for this week, since we are in earnings season, if you're not already, you do need to start going through a process of looking at the stocks that you currently own. What is your plan for those that have not yet reported? Are you going to sell? Are you going to hold? Are you going to keep all of your shares, some of your shares? Make those decisions up front. Number two, keep building that watch list. Go through the different charts in the IBD 50 sector leaders, IPO leaders, the different lists, and look for those that say they're near a buy point and they're about to report, and then learn more about them and decide very specifically if it does break out on earnings, on good volume, how many shares would you buy? The more detail you have for your plan, the easier it is to execute in the heat of the moment without freezing.
When you start investing, it's critical to have a game plan for success and a simple routine that fits your schedule. With Investors Business Daily, you get both. The Market Pulse shows you the right time to buy or move to the sidelines. Unique lists like the IBD 50 highlight stocks that could be on the verge of a big move. And IBD Stock Checkup gives you pass or fail ratings for any stock before you buy. Get a free trial at investors.com/radio show. That's investors.com/radio show.
Now, the final segment of How to Make Money in Stocks with Investors Business Daily.
As we move to a TV format, we will no longer have a radio show. But we want to thank Alex, our trusted editor, who's been with us here for nearly 4 years. He's done an outstanding job.
And has done every single episode except for 2.
Yes, which is amazing.
3.5+ years.
He's been here loyal every single week. Alex, thank you so much for all that you've done to help us out. We also want to thank everybody over at AM 870, the radio host of the show. Chet, thank you for all the support and the lunches and the fun, good times. And we've been very lucky to be on AM 870. We thank everybody over there.
Right, and although the show won't be on there anymore, we'll still continue to do things with AM 870. They've been great partners. Amy will still be doing a little spot twice a week with Larry Marino.
And I've done 3 wealth summits with AM 870. Been great fun.
That's right. So we'll still be doing that kind of thing. And of course, we want to thank all of the listeners on AM 870 for tuning in each week over these 3.5 years.
And you can still find us. We're not going away. You can find us at investors.com/investing show.
Right, and we actually will still have an audio version of the video show. So if you prefer to download that rather than watch, you will be able to do that. And of course, we want to encourage you to keep listening to AM 870. You'll find them on air at AM 870 in Southern California, online on iHeartRadio. They have a lot of great hosts, so please keep tuning in to AM 870.
Okay, see you next week, everybody.
You've been listening to How to Make Money in Stocks with Investors Business Daily, featuring Amy Smith and Matt Galgani. For more stock ideas and investing strategies, and to subscribe to the free podcast of this show, log on to investors.com/radio show. That's investors.com/radio show.